Today we're going to talk about what I think is one of the most important Fibonacci extensions, the 23.6. I use the 28.2, but it's basically the exact same thing. The 23.6 to me is the difference between bullish and bearish. If we can't break over it, I would consider that bearish, along with a few other factors. We want to find a clear low to high intraday swing, just like this one looks pretty good. And the way you can tell if it's valid is if you project it off of the next low and price answers to those extensions. For example, here we can see finding resistance on the 28.2, so I would consider this a correct measurement. You can see here we don't make the 28.2, we kind of bounce up, push up to make the 100, and then we make a new low. So we're going to activate this drawing and pitch it off of this low. Here you can see several bearish factors in play. One, we've got a downward facing VWAP and price action is below it. Two, we've also got the 8-day moving average, these red dots rejecting price action. And three, we have a double top on this 28.2. So this might have been a good time to take a short position. You might have wanted to cover up somewhere around your next support line. And moving on, if we project this onto the end of the day's lows, right there, you can see we do push above the 28.2, but we hit our friend, the downward facing VWAP, plus the 8-day moving average starts rejecting price action pretty quickly into the day. 20 minutes in, we're already getting pushed down by it. So these 272.5 puts, here we're at about 90, and somewhere down here they're at about 2.2. So that would have been a nice 100+% lotto play based on the failed 282, the downward facing VWAP rejecting price action, and the 8-day moving average rejecting price action. A couple of other quick examples. In Amzn, here we have price breaking above the 28.2 and trying to hold above it, but the VWAP is rejecting price action. It's also facing down. Ultimately, the 8-day moving average takes over, rejects price action, and we have a sell-off. And you could see if we moved it again off of here, we push up but close below, and when we push up, we don't close above this 28.2, and again the VWAP is rejecting price action along with the 8-day moving average. One more quick example, snow. So even though you have a good push up, the continuation of a bullish trend is dependent on your next push up. So we're just going to measure this push up and see how the strength of the next wave is relevant to the previous wave. So here you can see again, we do close above the 28.2, but immediately the very next candle, we close below it. VWAP's facing down, 8-day moving average is rejecting price action, and we have a sell-off. So at the end of a long run, these are things you can look for to find a good short plays. Failed 282, and you can see how swings always have relationships to previous swings, and that relationship is what you can use to gauge strength or weakness and find short setups. Oh, quickly I wanted to touch on retracement levels. So as far as Facebook goes, going back to Facebook quickly, look at a 5-day 50-minute chart. You can see this wave pattern developing here. When we're having a sell-off, we want to find likely points for something to bounce. So if I draw a Fibonacci extension here from our high to our low, you can see we bounce exactly on the 28.2 retracement level. So I find that useful for finding places for a bounce on retracements and looking for points of resistance on extensions. Or if you have a back test of a 28.2 on an extension, that can be good too.